So guys, today we had another volatile expiry, and if you sold options today, I'm sure you had a tough time making money. And the reason it becomes hard to make money in this kind of market is because one half, in the first half, let's say for example today, when market was going up, it's very likely that if you sold any call options, the stop losses for those call options, they got hit, right? And of course, the put option that you sold during this phase, their stop losses got hit in the second half. So from a practical perspective, this kind of a day can be classified as a V-shaped kind of a day. Some people will say it's more of a W thing, but I don't think the bounce here was big enough to justify a W kind of a move. It's more of a V-shaped kind of a move. So for me also, it was a little hard. In the morning when I started, I had a sense that the market will go up given the way the market had closed the previous day. But what I had not expected was the intensity with which it moved, right? So in options, the thing is that 1% move may not necessarily be bad for you. If it's going against you, 1% is not necessarily bad. But if that 1% happens in a rather short period of time with a lot of momentum and a lot of gusto, that becomes a problem for an option seller, because that is when your stop losses get hit. So that is essentially what happened to me, and this is the P&L fluctuation. As you can see, in the morning I lost some money in the call option. In the second half I lost money in the put option. In fact, there was one bar, just that one bar, which caused my stop losses to get hit, and I lost I think 50k there just because of that one bar. But the rest of the day was fine. It was once you realize what's really going on, it's a volatile market, so you expect it to be volatile, so you keep adjusting. So of course you will not make as much money as you would do, let's say on a trending day or a very narrow range kind of a day, but you also will not lose as much money as you would do in the case of last week, right? So I hope you guys remember that there was a breakdown of the market in the second half last week, and that caused me to take a loss. So even though it was not a big profit day, I still will take it with both hands, because it is something, right? It is something. And but at a big picture level, what is happening is that it's a volatile market, and bulls are not giving up their control. At one point of time, they took the market to around 18,000. But bears are also fighting back very strongly, right? So we saw that bears pushed the market all the way down to about 17,000 at one point, right? So that struggle is continuing, and that struggle is visible on these expiry days. So if you traded today and if you're not able to make money on a day like this, don't feel disappointed. These days are tricky, right? These days are tricky, and it involves a lot of things, including luck, to be profitable on these days. But this is what basically I'm expecting in the next coming weeks. September especially is a month where you can expect some high volatility. And if you want to take my advice, either don't trade in September on expiry days, or keep your position sizes small. Or if you don't want to do any of that, at least have a stomach to handle the volatility, right? So volatility is going to be enhanced. You will see big jumps. You will see stop losses hit. So develop a stomach for that kind of volatility if you want to trade in this kind of a market. But that's basically it, guys. I mean, that's how the day ended for me. And especially after the one losing week which I had in the last week, it was good to come back to normal. Like, so that sense of, okay, I ended up in the green, that in itself is a big satisfaction. So I'm just closing the day just happy that it was a profitable day. And hopefully things will continue like this in the coming weeks as well.